So are we back now to risk on? In 2022, tech stocks just took a massive dump, but now in January of 2023, coming back strong with Nvidia up over 40% in just this past week, only beaten by Tesla up over 45%. And if we take a look at Tesla at just the beginning of the month when it hit its lows of around that $101 mark, it's up over 70%, closing out last Friday at $177. Tesla just recently wrapped up their Q4 earnings call, and overall it went really well. Just taking a look at the price action of their stock, jumping up about 11% on just Friday, despite in 2022 with their stock price just getting absolutely crushed. They said that in 2022 it was their best year so far, making deliveries of over 1.3 million vehicles. And in 2023 they expect to increase their number of vehicle deliveries to 1.8 million vehicles, and that's actually a conservative number is what they're saying. They think they have the potential to do 2 million vehicle deliveries, but with the looming recession or any black swan that comes up in 2023, they want to go for a more conservative expectation. So to hit 1.8 million deliveries in 2023, this is going to be really due to the help of them lowering the prices of their Teslas, which they've done already, and so far that has increased the demand quite substantially to where that they received way too many Model Y orders that they had to increase the price back up $500. Now with Tesla pumping back up as well as many other tech stocks, the big question is the bull market back? And so the bull's argument lately has been, well, CPI numbers have been coming down. Inflation has already peaked, and we see the Fed reacting to this by lowering interest rate hikes. So originally they hiked interest rates by 0.75 basis points, and then they lowered it to 0.5 basis points. And in February 1st, coming up next week, they're expecting that Fed will only increase interest rates by 0.25 basis points. So of course the markets are forward looking and the bulls are expecting this to happen. Eventually the Fed will pause interest rate hikes and just keeping interest rates at those high levels but not increasing them. So they're thinking that the Fed may pivot soon, which of course will eventually bring back the bull market. So they're throwing in their money and they're placing their bets now. However, on the flip side, the bears are saying that this latest pump is nothing more than the January effect. So the January effect is essentially saying that back in December, towards the end of the year, many people are actually selling off their losing investments, some of the stocks that they've lost money in order to gain some tax benefits. This is called tax loss harvesting, and they need to wait at least 30 days to buy those stocks back. So people tend to buy those back in January, of course, then increasing the price once again. And so there are some bears out there who's thinking this is just a bear market rally and that things are going to start heading back down again soon. Ken, also known as Chicken Genius Singapore, recently tweeted, "Tesla has moved up 43% from the bottom in 2 weeks. Market's been up purely due to liquidity injections. I believe rug pull soon." And Ricky Gutierrez, who's a really good stock trader, just recently came out with a video yesterday explaining that this recent market pump is nothing more than a bull trap. He thinks that all of January we're going to finish off strong up until the Fed conference call in February 1st. That's going to be next Wednesday, where he thinks that the Fed is going to need to reduce their balance sheet. They're going to increase interest rates, which will have an effect on inflation numbers. Inflation has been going down month over month, but he thinks eventually that's going to go back to the upside. And so this is going to have a negative effect on the stock market.
The concern that I have is we haven't really seen the Federal Reserve reduce the balance sheet. And I don't really think that a lot of you understand how significant that is. When they begin to raise interest rates, pay attention to the Federal Reserve and how much they begin to reduce the balance sheet and how that affects the market. That's going to be the next hurdle. We've seen month over month from 9.1% to like 8.9 and then 8.5 and then 8.3 and then 7.9, right? We've consistently dropped month over month. We've seen inflation actually drop. This is where I believe that when they begin to reduce the balance sheet, and interest rates begin to pick back up again, meaning it's more expensive to borrow money, this is where I believe that we will see those inconsistencies, where we will no longer see month after month inflation dropping. How do you think the market's going to react?
And last, Brian from ClearValue Tax mentioned to his Patreon members that leading up to the Fed conference call, he expects the demand for EVs to wane.
So one of the concerns leading up into the conference call, I'm not talking about just companies specific to Tesla, but as an industry as a whole to EVs, was that demand was waning. So still growing, but slower growth rates because of recessionary fears.
In a response to a comment, he mentions that he's still waiting for a better price for Tesla, which means that he expects the price of Tesla to head back down even below the lows of January. So if you didn't watch my last video yesterday, I essentially gave the argument that I'm still more on the bearish side, mainly because the Fed needs to begin to print money again. The reason why we saw those all-time highs in 2021 was because they were printing trillions of dollars. And so if they're not quantitative easing, then we're only going to see nothing more than these bear market rallies, which will be short-lived. So that's my prediction, and as well as all these other people that I mentioned in that video. So definitely check that out. Links should be down below. All right, guys, if you like what I do here, definitely hit that thumbs up button and subscribe to the channel. Really appreciate it, guys. My name is Jimmy Invest, and I'll catch you in the next video. Peace.